Good morning. Welcome to YG Live on this Friday morning. It's Friday the 3rd of March. Let's take a look at the headlines as we wait a stronger start across the European markets. There's been gains across the Asia-Pacific region as well, with the Nikkei leading the rise in the APAC region. In amongst the headlines today, we've got Tokyo CPI pulling back a little bit in February, and the unemployment rate unexpectedly dropping in the latest reading. Deutsche Lufthansa in amongst the corporate news headlines today. It's swung to a profit and it's looking good, it says, for 2023. And in the FTX aftermath, Silvergate on the brink of collapse. That's one of the headlines we're following in the cryptocurrency space on this Friday morning. Let's take a look at what's happening at the moment on the volatility markets. You can see here this move down that we've seen in volatility. We're now at 2-week lows. For this measurement of the markets, indicating that people are prepared to take on more risk. And we've got gains, you can see, third day in a row here in the London markets. We're just around about 30 odd points away, once again, from breaching that 8,000 level. The first time we did that was back on Tuesday, 14th of Feb, a Valentine's Day present for the markets, as we saw that rise then to a record high at 8,044. I've still got this target up here at 84.56 in mind. As we've been saying, it now seems like it's proved that this recent fall that we've had down from that record high back on the 16th of Feb, we've got that drop now as of just a small retracement, and we're on the way back up again. It is only a small candle, though, I would say, today, but we're an early trade on the 24-hour markets across the London session. This is the German DAX, second day in a row of gains on the 24-hour markets, 15,573. Same sort of price action after the recent declines. We've got gains across the board. And that across the board includes France, third day in a row of gains here on the 24-hour markets, looking for a stronger start in the French CAC 40, currently trading at 73.08. Overnight in Asia, I was talking about the Nikkei 225 stealing the headlines. That was up 1.5%, but we also saw gains across the Chinese markets today on the back of what's been really good results in terms of the overall economic performance out with the numbers there today. I want to show you that rise on the Nikkei ASX down up a third of 1%. That rise on the Nikkei, you can see there now taking us there to levels not seen since the 15th of December. And if you look at the long-term downtrend that I drew on here, we've now breached that as well. So I think that's only a minor technical point. But I think more interestingly is we've got a turnaround at the moment on the MACD. I'm going to expand this oscillator out here so you can see and prove my point. We've now got a green box here, which indicates this move around here, the blue line back up above the red dotted line. And that indicates the momentum is picking up on the upside. And that, broadly speaking, means that people are looking for a reason or a level in which to get long. If you're not already long, maybe you're looking for possibly a weaker point. We're at 27,892. Whether you're going to get that, I'm not sure. This is a nice little trend underway now, well away now from the 200-day moving average. Wall Street closed last night where we saw gains across the board. The Dow was the runaway winner. In fact, yesterday, remember me talking about the Dow was the only market that was up. It was only a small rise on the cash session the previous day, but that's now second day in a row of gains. Dow Industrials up over 1% in yesterday's session, gains in the S&P and the Nasdaq Composite. I want to start with how the 24-hour markets are moving on Wall Street with this move up that we've got at the moment on the Dow, holding on to the gains yesterday at 32,954. Tech-heavy Nasdaq, you can see the losses recently taking us down below the 200-day moving average. We haven't yet seen a full candle below the 200-day moving average since the 25th of January, but whether or not this uptick continues remains to be seen. Much of what we've got, of course, in these growth stocks, which is what the Nasdaq's full of, relies on interest rates not rising too much further. We'll have to see just what evidence there is that develops over the next couple of weeks or so as we go into the next Fed meeting in a week or two's time, where we'll widely expect to see another interest rate rise. I think everybody's penciling in that. It's just a question of whether it's 25 basis points or 50. And if it's 50 and they do keep their foot on the pedal, I think this is further downside to go for these tech stocks, as they do, say, rely on some relatively benign inflation data. Talking about inflation, let's take a look at what's happening with some breaking news we've just seen recently coming through from Morgan Stanley. It's raised its ECB main refi rate forecast to 4% as the inflationary pressures continue across the Eurozone. The move by MS, which had previously seen the ECB rate at 3.25%, follows similar revisions by other leading investment banks. Just want to quickly put that into context for you. The CPI, the Consumer Price Index in the Eurozone, came in at 8.5% yesterday in February, year on year, surpassing expectations following stronger readings in Germany, France, and Spain, and among some of the larger economies across the Eurozone. Let's take a look at the euro dollar. We've got some US ISM services data out a little bit later on today, which I think could be of interest for this particular trade. The euro is up, but it fell yesterday in the face of a slightly stronger US dollar. It's currently trading at 106.20. Is this little bit of an uptrend we're seeing at the moment likely to continue? I'm not so sure. We'll have to see how the economic data develops over the next few days or so. If you are long at 106.20, which is where we are, stock goes down here at 105.70, just under the underside of this rising line of support. But keep a careful eye on that, because things may unwind on a penny if it does turn in the opposite direction. Talking about economic data in Japan, the unemployment rate overnight unexpectedly fell to 2.4% in January, down from 2.5% at the back end of last year. Economists had anticipated that to remain at 2.5%. But also released overnight, Tokyo inflation. Now, this is seen as an advanced indicator of the national numbers. Core CPI in the Tokyo region rising 3.3% in the month of February, year on year. That was decelerating from that 42-year high of 4.3% we saw in January, in line with the overall consensus. Just for the record, it's not really, I don't think, necessarily giving a trade here. But as of yesterday's intraday trade, we had seen the highest print for dollar yen, not seen since the 20th of December, since that big day of declines that we saw for the US dollar against that stronger yen. Since then, the yen has lost a little bit of its poise. 136.43 is where we are there. Meanwhile, in China, Caixin services PMI jumping to 55 in February from 52.9 in the previous month. This was the second consecutive month of expansion in the services sector in China, and the strongest in almost 4 years. The new order number rising the most since April 2021, and foreign sales advising at their fastest rate in almost 4 years as well. Just wanted to show you what's happening with your US dollar traded against the offshore Chinese yuan. We got the dollar down today. This is after a little bit of a stronger trade yesterday for the dollar against that yuan. Today we're down below the 200-day moving average again at 69.064. German trade numbers just out, rising more than expected. Imports unexpectedly falling in the month of January. Seasonally adjusted trade surplus numbers, 16.7 billion euros. Exports up 2%, imports down 3.4%. Meanwhile, as I said in the US later on today, February ISM services PMI data will be published at 3 o'clock this afternoon. The market expecting the index to fall to 54.5 from 55.2 the previous month. Anything over 50 indicates expansion for this particular area of the economy. Now, let's take a look at what's happening in other areas of the market. Rightmove has come out with numbers which I think are interesting because we've been reporting a lot, of course, problems with house builders because of concerns about the outlook for the future of what's happening with the house prices overall, and also for these estate agents that are finding they're going tough. Rightmove full year numbers, revenue up 9% overall year on year. I want to bring up a chart here for Rightmove just to show you what's been happening with the stock in the context of stresses and strains in the house building sector and amongst those listed estate agents. But Rightmove seems to be doing some brisk business. Customers continuing to upgrade their packages and to increase their use of digital products through the Rightmove platform. Operating profit up 7%, 241 million. Average revenue per advertiser, now this according to Rightmove is a key measure, that's up 11%. Final dividend up 8%, that's the H2 dividend. Total dividend for 2022 up 9% to 8.5 pence. I think this looks a pretty good story to me. On the basis we got a move for the FTSE 100 and the FTSE 250 built into the start already. I don't have a position on this, but if you're long on this, your stock goes around about the 550 pence level. 562.4 is where Rightmove will open at the top of the hour. Another stock to watch at the top of the hour is Deutsche Lufthansa. The German air carrier had returned to what it calls a clearly positive result in 2022. The company reporting a full year operating profit of 1.23 billion for last year compared to a loss of 2.3 billion in the previous year, driven of course by the COVID lockdowns and so forth. Still down 34% on pre-pandemic years. Revenue 33 billion, down 10%, but that was in line with consensus. The passenger numbers more than doubling in 2022 to 102 million. But I think for me, the takeaway headline is one that appeared on Bloomberg right at the start of the release of this, and that is that Lufthansa sees significant improvement in adjusted EBIT in 2023. Now, one has to ask just how much of this has already been built in. In the last few days, we've seen it knocking on the door of levels there not seen in this market for Lufthansa since the highs we saw back in July 2021. But I think whichever way you cut it, the stock is clearly doing well. 987.3 is where this opens. If you're long on this, your stock goes below the 950 level. If you are long on what's happening there for Lufthansa. Now, let's take a look at what's happening in some of the other business news headlines that could give sort of a move in the markets today. Apple is being proactive in its move in trying to make sure that it keeps continuity in its Apple iPhone production. Excuse me, the company that Apple uses to assemble its iPhones, this is Taiwan-based Foxconn technology, has signed an agreement to invest in India's southern Telangana state as Apple supplier looks to pivot beyond China. Let me take a look at what's happening with the Apple stock. Some of what we've seen recently with this drop of 32.2% since the highs we had in Apple stock when it went into a $3 trillion market cap company back in January last year. Some of those declines have been on concerns about the zero COVID policy that China has adopted. This move follows an announcement between Foxconn chairman Young Lui and Telangana Chief Minister K. Chandrasekhar. Bloomberg's reporting that the move will create 100,000 jobs in India, presumably shifting staff count from China, which is more than a shot across the bows and a warning to China that it could lose a lot more business unless it changes its policies in a number of areas. The interesting thing is that Foxconn, as I said, is a Taiwan-based company. There are a lot of concerns about the potential involvement of military by China in Taiwan. And one wonders whether perhaps maybe some of what Apple is doing is trying to avoid any confrontation with China and making this move now so it can use India as a place to manufacture its iPhones rather than China. As I said, a shot across the bows. It'll be interesting to see if we see other companies choosing to move some of its manufacturing outside of China. Now, let's take a look at some other news headlines. In the digital currency space, FTX collapse claims another victim. Silvergate Capital has lost over half of its already depleted value as of yesterday's close. I'll show you the share price traded chart for Silvergate. It's not an all-session stock, but you can see quite clearly, if you look at the direction of travel here on the share price chart, from the record highs we had around about the 24,000 level back on 22nd of November 2021. That was $240 per share. Here we are now down at 572.5. Big drop yesterday, 57.7% down yesterday. Warning its ability to continue as a going concern. Cryptocurrency heavyweights like Coinbase was also affected yesterday, but by a smaller margin. That was down, I think, 3% at 4% at one point, below the 200-day moving average yesterday. And then came the rebound, ending down just 0.9%. Silvergate specializes in cryptocurrency transactions, unlike Coinbase, which is an exchange. It's delayed its annual report, Silvergate saying it had sold an additional debt security tranche to repay debts this year, raising questions about its ability to stay in business. As for cryptocurrencies themselves, today we got a drop on the price of Bitcoin by a margin of just over 4.5%, down at 22,392. Let me stay on the charts because I wanted to update you as well on what's happening in other areas of the market. This is Brent. As of yesterday's high point, we're at a more than 2-week high yesterday for Brent, and it's holding that level at 84.57, on track to post their first weekly gains in 3 weeks. Last Friday, the Baker Hughes rig count survey showed a drop in total rig numbers to 753 from 760 the previous week, entirely due to the number of oil rigs in operation down 7 to 600. And just to follow up on what's happening with spot gold, it's been a pretty good week as well for those that hold gold in whatever form. 5 days in a row of gains for the price of gold on the international markets at 1843. Just want to stay on the charts as well for one last chart, just to update you on what's happening with nickel. As of the close yesterday on the LME, we're at the lowest point we'd seen since the 9th of November last year. Remember all this? That big spike we saw back in March 2022. We've heard this morning some breaking news. that the Financial Conduct Authority here in the UK has opened an enforcement probe into the London Metal Exchange's conduct on nickel around this period where we saw that massive spike up in the market. That's it. As always, we're back at 10:30 with Charting the Markets. Hope you can join us there for that. Watching Rightmove at the start today after what appears to be some pretty good numbers. For more videos from us here at IGTV, join us on Twitter at IGCom, Instagram, and subscribe to our YouTube channel.